Hello, traders. It is Tuesday, June 18th, and we've got a special session, special live event today. I'm going to be conducting today's presentation with Rajul. He is a member of ours. He has started trading, and he's going to give you a lot of his background. This is particularly interesting because a lot of you are going through exactly the same things that Rajul has already been through, and he's documented them incredibly. So without any further ado, Rajul, thank you so much for joining me today. How are you doing?
I'm doing good. Thanks for having me, Pete. Nice to see everyone via stream versus via chat. So excited to be here. Excited to, just talk about some of the background, look at some trades today, and all that kind of stuff.
That's exactly what Rajul has done. He's taken my format from my YouTube channel and he's used it as a learning aid for himself. And so he goes through the entire process. He reviews his previous picks, which we're going to do in just a second. And so he describes what went right, what went wrong with the trade, what he would have done differently. Then he goes into market analysis, and then he finds a couple of new trades. So I'm really going to let Rajul lead the conversation today, and then I will add my comments along the way as well. And I'll be monitoring your questions. And I've got a few questions that I'll be asking him as well about his overall journey. And Rajul, why don't I start with just my picks and I'll have you bring them up on your screen. So we're going to be
Sure.
using Rajul's screen today. And one of my previous picks from my live event a week ago was JPM. And that was on Wednesday. Our last live event was just before the FOMC statement. And I was looking for some volatility in JPM after that announcement. So I bought a straddle just before the FOMC statement. And about 10-15 minutes after the statement, I exited it for a scratch. I didn't get the initial move that I was looking for. The option premium stayed inflated while we were waiting for Powell's press conference. Nothing happened. The stock didn't move. The market didn't move. Probably one of the most boring reactions that I've seen. So big nothing burger. And then on Sunday, I highlighted BABA as my pick of the video. But the caveat there was that we're going to be waiting for signs in the market that it was ready to sell off. In particular, I was looking for a gap up and a reversal of that gap up that would leave a long bearish engulfing candle off of that all-time high. That would be a sign that the market's ready to roll over, and only then would you consider taking a short in BABA. So those are my picks I'm going to review. Let's take a look at some of your picks, Rajul. What have you had recently?
Yes. Let's go to the YouTube picks here. Two picks. So the first one was you. Took that a couple of days back. Over here on the 13th. So if you look at this price action on you, it's just beautiful, steady, orderly selling. We got a little bit of, compression profit taking here, pull back to that 8 EMA, broke through that compression, nice long red candle, some good volume there. So I like to use short on the 13th. If you looked at what the market did on the 13th, had a new all-time high. We're just kind of chopping around. So my bias was like, look, I don't think this market is really going to go anywhere too fast. I think we're either going to drift around or we might see some of this gap up and bearish engulfing candle on you. So took you on the 13th. I took some partial profits over here at around 1620. So got in at around 1680, got out a little bit at 1620. I'm still in the trade just because this trend strength is pretty strong. One of the things I've been working on is just scaling out of trades a little bit more, and also just kind of really looking at the price action more for some of those exit signs. I think in this environment, since it's a little bit more, I'm a little bit more neutral to mildly bullish on what's happening in the market. I'm more inclined to take some profits into strength. But this is a strong trend, and I think you's been ignoring the market pretty much since December. Has not really been caring what the market's been doing. So still in that.
Very nice.
Yesterday, I gave a long on cost, so that's doing pretty well. My bias here was that look, we broke out to a new all-time high. I'm still pretty cautious at this juncture. think, Harry had some good comments yesterday about, some of the reasons why the move was happening. Here I saw, look, we got this compression break. I don't think we're going to get anything much today, considering we had a big day yesterday. We got a holiday tomorrow. Cost to me, just super strong D1 chart, very orderly trend. I have a passive target out to take a 1 ETR move on this thing, and I've sized it maybe a half size because I know that if we get that red bearish engulfing candle, I gotta be out of that trade. So those are the two picks: really weak strong, really weak stock, really strong stock. So just staying balanced and just staying light.
Both really nice picks on cost. You can see how the stock has been able to grind higher today, even when the market is flat. When the market was heading down, you could see how cost was starting to grind higher above VWAP. So that told you that you had nice relative strength in it. D1 chart, super strong. Also of note is the fact that retail sales came in at 0.1% this morning. So that should have put pressure on the overall retail sector. Cost was able to buck the trend and continue to move higher. So nice looking stock.
Yep.
So you want to go into a little market analysis and tell us what your overview on the market is right here?
Yeah. I see a quick comment here from Nip and Gunnar. I just thought I'd clarify it. He says ETR. I'm actually talking about the ATR, the average true range. So for these kind of swing scalps, what I found works in these neutral environments for me is really taking these great entries and selling into strength. So I found that if I have a passive target for like a 1 ATR move, that has worked out pretty well for me in the past. So that's what I do for those swing targets. But anyways, yeah, let's go to the market opinion. So long term, kind of fundamentally and technically, I'm kind of mildly bullish to neutral. And I think actually this last move here has been a little more bullish than I expected. It's pretty different from what we've seen. I always like to go back and reference, the price action here if you have any doubts or confusions about what strong, tight, orderly price action looks like, right? I mean, we have a huge move higher, no dips, we compress, go up higher again, a little bit more compression, and then, we get another stage higher, and then at the end of the move, you can see how it gets more choppy and patchy and gappy. So I know that's my reference point for really strong bullish price action, and we haven't quite seen that. It seems like every time we get a breakout to a new all-time high, we just kind of stall, right? Breakout to a new all-time high over here, stall, bearish engulfing candle. I like this dip and took some longs on this dip. Again, breakout to an all-time high at, June, stall. We got the CPI, stall, breakout. I think we're going to stall. So, it's not the same type of momentum that we've seen. So longer term, a little bit more mildly bullish, like Pete's been talking about, just waiting for that dip to really get in on things like put credit spreads and some shorter term swings where I can be a little bit more aggressive. On the shorter term over here, a little bit more neutral. Like I said, I think, we're closer to, if you think about the market in cycles, I think we're closer to the end of the move than the beginning of the move. And because of that idea has really helped me to not be, out over my skis, overloading on a whole bunch of longs, because I know that since we're close to the end, any sort of dip, it's really going to have me take a lot of heat. And I made that mistake early in April at a couple of too many longs because I didn't recognize the warning signs. So, that's why I've been really emphasizing just to keep it light. So short term, a little bit more neutral. And if I look at the M5 market today, maybe a little mildly bearish, maybe fairly neutral. I mean, I have this little bearish channel that we have here. We got a nice little bounce off it. So maybe we can test the high of the day, but I don't think it's very likely we break it. We also have this 1OP bullish cycle coming in. So maybe a little bit more neutral, but yeah, I think the theme is just pretty neutral, pretty on the sidelines, and just staying light.
Yeah, all really good points. We've got a couple of other things that are going to lead to probably a soft market, meaning soft volume wise. And one of them is tomorrow we've got a holiday. So That means today's probably going to be fairly light trading. It means that Thursday is probably going to be fairly light trading. And the move that we saw yesterday is largely program related. So when you take Wednesday out of the equation, you know Tuesday is going to be light, Thursday is probably going to be light, and you're looking for one day when the institutions come in and they adjust. It happened to be yesterday. And if you came into yesterday and you were kind of casual about it, which you should have been, you should have expected a light trading day. I certainly did yesterday. And then as you start watching, it's like, okay, well, that was kind of an interesting move. We just got through the high from Friday. Okay, well, you see, you make note of it, and then you start stacking some green candles, and you see a little bit of volume coming in with no real retracement. That first move that took place, those candles ended around 11:20 or so. It's like, okay, if this doesn't pull back at all, this thing's going to keep going higher. And so, from a trading standpoint, you take some initial long positions, and then you start seeing that the market's not going to retrace, and you keep adding to those positions, and lo and behold, the market keeps grinding higher. So I can't say that yesterday would have been a day where you're going to buy with both hands. I mean, you're going to be relatively passive just because of the market backdrop and the holidays coming up and everything. But yeah, it was a decent day to make some money. And then we've got another holiday coming up. We basically get back from this holiday, and then we get through next week, and then we've got the 4th of July holiday pending as well.
Yep. Agree with all that, Pete. I thought yesterday was a bit of a sneaky bullish trend day.
Very much so. In those programs, you're going to get one day like that during expiration week. And so one of the keys that you want to watch for, if you have choppy back and forth price action, it's not going to happen. You're not going to get that directional day. You're not going to get that bullish or bearish trend day. But if the institution sense that there's really good momentum in one direction, they all start kind of feeding on each other. It's like, oh yeah, it looks like those are starting to kick in, those programs and those programs. And the next thing you know, then everybody's kind of running their programs and the market moves higher. And these are all hedged arbitrage positions that they're trying to unwind or roll forward the week of triple witching. And then, I mean, I've seen it so many times. I don't know exactly what kind of practices they're involved in. I do know some of them back from my earlier years in the brokerage industry, but everything has changed. So I'm not sure how or why they do it. I just know that it does occur. So it's something that you can kind of watch for. I did have one question. They said that they loved your username, which is the Jazzy Black Santa. So I've got to ask, do you own a red velvet suit?
I don't own a red velvet suit. I think I have to go to Vegas to get one. So gotta drive up over there. So that's a funny story.
How did you come up with that?
So in college, I had a friend from London. His name was Rohan, and whenever he would text me, he would put the frog emoji. So I say, "Hey Rohan, why'd you put the frog emoji in all your texts?" And he said, "Hey, I just think it's really, really funny." And I was like, you know what? I would like an emoji. I feel like he sort of owned that frog emoji. So I was like, I'd like something, totally random. And that's just kind of mine. So, I played the saxophone in high school band. So I was like, I'll do a saxophone. And then I was like Santa Claus, but I'm like, you know what? Like, why not have him be Black Santa Claus? So Jazzy Black Santa, and that's pretty much how it is. And then it just sort of stuck. And no one has taken that name, although I think JBS is a pretty big meat packing industry, so I don't think I got JBS first.
Well, we talked a little bit about your past in college, so let's talk about kind of your whole journey, because it's interesting. Very few people are going to reveal as much information as you did. A few months ago, you did a very, very long article on your journey, and you recorded a video. I watched it. It's what inspired me to subscribe to your YouTube channel, to follow you, and ultimately to reach out to you, because I felt that there were so many commonalities between what I had gone through and what you went through that these same themes have to be replaying for a lot of people who are just starting out trading. So, can you give us a little background on, how you started, what got you inspired to do this full time and to pursue it, and a little bit about your journey?
Yeah. And I will say just before I start, it was really nice hearing that you had also gone through some of these same experiences. I think trading can be an isolating journey. So having that sort of shared pain is was very, in some ways, heartwarming, I think, to hear. So how I started was I'm going to go back to maybe 2021. I didn't know anything about trading. I had got my first job, and I knew that you should invest your money in the market. And most of my family, they're like, hey, just put it in the market or give it to a mutual fund, and they'll sort of take care of it. So just kind of getting into that. I had another friend, my friend Greg. He's actually in the one option chat room as well. So shout out to him. But he was not very satisfied with his job, to say the least, and he was getting very into trading. He was saying, "Hey, look, like look at all the stuff is all, just kind of going on and on and on about it." And he's super passionate about it, and was certainly passionate enough to have me, look into it. So that's really the origin point. And the next sort of inflection point was, I remember I'd gone to his house. He was living in Santa Monica at the time, and he was telling me about the real day trading subreddit. And he was like, "Yeah, this guy Hari Seldon, he's got an 85% win rate. He's doing all these challenges." And then I was looking at that real day trading subreddit, and I was like, that really flipped my mind on the idea of trading, because at that point I was like, this is just, I thought it was just luck, right? Like again, GameStop was getting super huge too at that time. So I was like, this is all, luck. And then I saw those challenges, and I saw what he's doing. And then it convinced me that, like, there's no way that someone could just be this lucky, this consistent. And his approach, right, and very similar to your approach of just treating this as a job. There's no shortcuts, right? It's just making that consistent profit rather than trying to get this huge win. Those things that were very against, or really flip what I thought about trading. So, those are the two main things. And then after that, it was just the snowball effect. I was just diving into it more and more. I was reading the whole wiki at the time, and I was writing new articles like almost every day. Seeing stuff on One Option, and then I subbed to One Option a couple of months later. I think you were just getting around to writing the system, so those articles are coming around too. So yeah, I mean, it's really just those two areas were the origin point, and it just sort of snowballed from over there.
Now, your education, though, your educational background, can you tell us a little bit about that as well?
Yeah, so I did went to UC Irvine. I did my bachelor's in business economics, which in my opinion is just economics, but it has a business title. And I did my master's in business analytics the year after. Both of which I think I think they helped a little bit, especially in 2022 when everyone's talking about inflation. I was like, hey, yeah, I think I actually learned this in my school, but I think I'm probably a better economist from trying to learn how to trade than actually my education in my school. Because you really got to put all the parts together, and I think fundamental analysis is really, really, really tough. And still, I'm wrapping my head around that. So, that was kind of my, the undergrad background wasn't, I would say that if you don't have a degree in economics, you can still trade. I don't think you don't need it. That's sort of my point here. The business analytics was really stuff with like machine learning and data, and things like that, which I think it helped in the way that it helped in the way that learning machine learning is very hard, and I'm not good at coding, and I didn't put a lot of work into learning coding, but I did learn that, hey, if I do put in work, I can learn these tough things. So I think it opened the door to saying that, hey, if you put in work, you can learn hard stuff. And I knew when I got into trading that if I can learn stuff that's something as hard as machine learning, I certainly have a shot with trading. Trading is much harder and a very different type of challenge. But that was kind of the main benefit from there. And then the other part is just statistics. Hari talks about statistics all the time, just understanding basic probability, expected value. I had to take a bajillion statistic courses in my time. So, but nothing you can't learn on YouTube. So that's my background. Again,
one thing that I will say that's, you're going to be very successful. I have no doubt about it because of the things that you're doing. But there's also one other key element that shines through, and that is that you are passionate about this. You really love this stuff, and you've just gone head first into it. You've learned, you've absorbed everything that you possibly can from every resource, leave no stone unturned. And it's that relentless pursuit of knowledge that is critically important. And, whether it's in trading or any other pursuit in life, there's a saying that I kind of lean on, and it's that successful people will do what unsuccessful people won't. Not what unsuccessful people can't, what unsuccessful people won't. So part of that is just doing your daily videos. That is time consuming. I mean, it takes a while to go through and to record them, to render them, to post them, and to review it. And this is probably an hour to an hour and a half a day that you spend on that. Have you felt that it's helped you?
Definitely. I think it's just putting your opinion in front of an audience, even though when I started the video, my audience was 0. But putting an opinion in front of an audience really helps you. It really, I'd say irons out the kinks in your decision-making process, right? And a big part of trading, I think, is confidence in your market analysis, confidence in your ability. So if you know that I can consistently give good picks and other people know I can consistently give good picks, right? I mean, you have such a strong basis and a strong foundation for your confidence. So, that was kind of the idea. And also just a nice historical record. I mean, that's the same reason we journal, right? So you can go back in time and you can say, hey, actually, in this month, I did get 75% win rate. Like I got three out of four trades, I got them right. And if you don't keep track of them, you're not really going to know. So it was another way to me, record keep, accountable, and just push myself a little bit more in terms of giving out my opinion. I felt at that point I was closer to the end of the 2-year journey. I had a couple of months, not in a row, but of that 75% win rate under my belt. I felt I had all the pieces, but I just had to put it together. So I felt that the video was really the next step for me to put it together.
Right. Yeah. So, it's been interesting. And you're also a coach. So, can you talk about some of the similarities there? Though I oftentimes refer to golf and trading. And one of the big things is that, like any professional athlete, you put in all this time up front, and there's no guarantee, and there's no money coming in. There's no reward for all the effort that you've put in, and you might not ever be rewarded. And that's how trading is to a large degree. What similarities, since you coach tennis, what similarities would you say that you've been able to draw between trading and sports, and even coaching sports?
I'm sorry for the quick delay, Pete. I'm just going to take profits on Dell here.
Please do.
Yeah. So it's there we go. All right. It's a little bit less than I wanted, but we may talk about those new 1OP signals a little bit later. That's a really good point. I think just to maybe start high level, there's a lot of commonalities between trading and professional sports in terms of this is performance based, right? Like in a regular 9-to-5 job, it doesn't matter how good or bad you are, you get that steady paycheck, every 2 weeks. In trading, right? you have to pay yourself, right? And you can hurt yourself, right? You can hurt your account if you don't know what you're doing. So there's a lot of similarities that I found in terms of just hard work, technical ability, understanding risk reward, understanding, when you do need to go for certain things and when you need to go back. I think solo sports, tennis, like golf, there's a lot of similarities because you're just on your own, right? If you're in a team sport, you're having a bad day, your teammate can pick up some of the slack. But in trading, right, it's all you. And for better or for worse, I think I kind of like that, maybe because I playing tennis. So I was like, if I lose, it's on me. If I win, it's on me. I kind of like that. Some people maybe not as much. But in tennis, I mean, the best example I can give is, every ball that you get is different, right? There's all these different variables: height, spin, speed, and you have to decide really what's the best shot to hit back at the time, right? And you're taking all this information, all this context, like where you are on the court, where is your opponent on the court, what's your strength, what's his weakness, how are you feeling today, are you feeling tired, how is he hitting, is he doing what you expected? And trading is the same way, right? We talk about context, and there's all these different things you have to put together to make this story, right? We talk about the D1 context, Pete talks about all the time, like what's happening fundamentally, right? It's important to know that if there's a credit crisis, you got to flip your bias to bearish just like that. That's an important context because it's going to drive that price action. And, in tennis, it's, similar way. If this guy is crushing his forehand, right, and he's just hot the whole match, and you had one strategy and you lose the first set 6-0, you're going to have to change, right? You're going to have to adjust. So this idea of risk, reward, adjusting, knowing that you can do your best and you can still lose the point. You can play a perfect point and you can still lose. And same thing like that can happen in trading. You can do everything right on a trade and it can still lose. And that's part of the process. So I found there's a lot of similarities between the two. And coaching, I think, me having to distill that knowledge to other people really helped me unwind that knowledge for myself. And it kind of helped me connect some dots to what was going on in trading.
Yeah, and I would say the one important thing in playing consistent winning tennis is reducing your unforced errors.
Yeah.
And it's the same way in trading is, you're constantly reading those odds and you're knowing when you need to take that shot and when everything is set up for you to take that shot and when you need to lay off of it and just keep the ball in play. And so,
Absolutely.
a light volume, low probability trading environment like today, you're already kind of in a defensive posture where it's like, well, I'm going to err on the side of not trading. If I see something really compelling and it could set up through the course of the day, okay, then you'll start taking a position, but you're not going to force it.
Yep, exactly. And that's part of the reason I took profits on Dell there. That was my bias.
Yeah, but very, very nice. And so only a couple other points that I want to hit before you and I start doing some analysis. One is that you went from trading and having that as your sole source of income to actually getting a job and now having that additional support while you're still honing your trading skills. Can you tell us a little bit about the importance of having that job and how it's impacted you?
Yeah, it's huge in terms of so when I was trading and learning, so I quit my job and then I was just learning how to trade full time. Was not making any money because I was very early in the journey. And that's the reason I actually started coaching tennis, because I needed some money. So having that job is nice because, one, I'm saving a whole bunch of money. I'm actually at home, so I'm not paying any rent, not paying any food. I'm just saving all that money, putting in the market. So I'm growing that, that net value, right? Just having that cushion ready. And then it doesn't put a lot of pressure on me having to make money too prematurely in the journey. Like, I'm still scaling up. I'm nowhere near where I want to be in terms of the sizing, but it's helpful to just, you don't have to carry the weight of the world all at once, right? You don't have to be Atlas or Sisyphus pushing up this boulder very early in the journey. Just you take it one step at a time. The trade-off with the job is it is going to eat away time, so you have to balance between time and the effort put. Harry talks about that catch-22 in the wiki. It takes 2 years, but it's 2 years of a full-time degree. If you can, what I'd recommend is, my job is all remote. I'm at home, so on days where I don't have any work, I'm actually able to spend that full time on the market. If there's a busy week, then I can kind of monitor the market on the sides. I may not take as many day trades. I might still mark charts and look at swing trades because I don't have to make all these adjustments intraday. So, if you're still there, you're trading and you're having a job, I'd say, keep that job as much as you can. Build that net worth, right? Build that base amount. So that way, hopefully when you make it and you're able to make money from trading, you're not, just, you're not just really feeling that pressure right away. You really want to ease into it.
Yes, I went through that myself, where I went from being an SVP for a brokerage firm to trading, and I had no clue. I sat in front of the screen the first day and went, okay, now what? It's a long, hard process, and I had drawdowns the first 8 months, and I was getting closer and closer to my stop out point, and it was definitely impacting me emotionally. I know that it weighed heavily on my wife. I was trying to support a family of my wife and 3 kids. So the bills were racking up, and boy, it was like a noose around my neck. And I had pretty much everyone discouraging me from following this path, which was my passion. And I know that you've had to deal with similar.
Yeah, it's that the last part is pretty tough as well. It's just like it really is the kicking you while you're down.
Yeah, it is tough. My friends and family, they could see that things were not going well for me, and they wouldn't even ask me about it. And it's just very easy to be withdrawn and just
Yeah.
not to even want to talk to anybody or anything about it. But I mean, eventually, in time, if you're putting the time and effort into anything, I don't care what it is, you will succeed. If you're relentless, you will succeed, and you'll succeed at trading. But when I say relentless, I'm talking 70, 80 hours a week, if that's what it takes. It's not 40 hours and, gee, I think I worked pretty hard this week. Oh, hell no. It's not going to cut it.
Yeah.
So,
And to your 2 points there, there's still a conversation with family members where they're like, yeah, how's your day job? But they don't really ask about the trading. It's still a bit of an awkward topic. And I've been slowly trying to push that more out there. I've been, sharing this link with some of my friends, my girlfriend, just, trying to spread that word out even more for me to be like, really own it. Like, hey, like I am trading, I've just been spending 2.5 years in a cave meditating. I've been I've been putting in all this time, and I want to kind of show you guys what I've been up to. I forgot the last part of your comment, Pete. If you could remind me what that was.
Well, we're just talking about the obstacles and the hardships of getting going, because you've got a lot of people discouraging you from taking that stuff. There's just a lot of risk, and there are a lot of people that fail at this. I suppose professional tennis player or football player or actor or actress probably have the same naysayers to deal with that we do. And again, you put all this time and effort in up front, and there's not a nickel coming back.
Mm-hmm.
And if you call it quits, it's okay. You've got to be able to move on if this is not right for you. But you've put all this time and energy and you have nothing to show for it. So
yeah,
I was just taking a look at a alert that came up. But anyway, let's take a look at some stocks, maybe keep it going, and then we'll answer some questions that people have. I see quite a few questions coming up, and I think that we'll get more and more of those that are really directed towards you.
Yeah. So I think, how I'm approaching this day is I'm really just looking for some day trades at this juncture. If we take a step again at that D1 context, kind of the spectrum of trades that I'm looking for is you can either put credit spreads or call credit spreads. Relatively strong longs and shorts for those swing scalps that I was mentioning earlier. Um, some earnings time spreads, if those set up, and some day trades. So at this juncture, I don't really want to take any put credit spreads. I want to wait for something like this on the 31st where we get this nice bullish golfing candle and heavy volume. After this pullback, that's when I'd want to load in. In my personal account, I did take that call credit spread on Affirm, but I would probably want to wait to see one of these bearish engulfing candles before I could call credit spreads. So to me, those are out of the picture for the moment. As far as earnings time spreads, if I was looking at some stuff today, I see ACN is not bad. We have low times exceeded. The difference is pretty low. I personally like a little bit higher difference, so I'm probably going to pass on ACN. But if that fits your criteria there, then you can take it. So I have one swing long, I have one swing short. I don't want to overload my portfolio, so I'm probably just going to look for some day trades, and maybe we'll see what Pete and I can find today.
I've got one that I like. Just looking at it now, this is off of Green Royal Flush. I like this move in Chewy,
Yeah,
CHWY.
I tagged that
That is
early
a
today. That
nice
was a nice
breakout
move.
through horizontal resistance. We've got the stock above all the major moving averages. It has been in a longer term downtrend, which gives it plenty of room to the upside.
Mm-hmm.
It's formed a nice base over the course of about 6-7 months. So that's also good. The fact that we're getting through some of these horizontal resistance levels. And oftentimes, I'm asked, hey, Pete, you always say to buy the stock in the upper right hand corner of the chart. And this one's not, it's down in the lower right hand corner. But if you take a look at the horizontal resistance levels that the stock has already been able to move through, that's what tells you that the base is formed and that, yes, now you can start considering this stock. And on a 5-minute basis, if you are able to bring up the 5-minute chart on Chewy,
Yeah.
you will see the volume that we've got today. And that's telling you that institutions are involved there. That is a nice big move. So the stock's not too far out of the gate here. It's just getting this really nice breakout. It's a little overextended today, but on any pullback in here, I would look for that support above that horizontal breakout. And I think this is going to be my long pick of the day.
Yeah. I like Chewy here. I see Harry in the chat, just as an FYI, he's talking about it's moving as a roaring kitty spec. So if you take the trade, be aware of that news. Know what that could be. There could be some volatility in there. And just yeah, just keep. I would say keep that as part of your game plan.
Didn't
But
know that it was a roaring kitty. In fact, I didn't even know what roaring kitty was. I was trying to put the pieces together, and I was like, "Oh yeah, that
I'm on the same
GME
boat.
guy." I'm like, "Oh, this is Chewy. It's a pet supply company. I guess it's appropriate that roaring kitty would be in this, right?"
Yeah. Um, Yep. So, but yeah, I mean, outside of that, it's some beautiful price action. I think I saw it earlier in the day. I love this bar at 11:15, but I caught it a couple bars too late. I really like to stick those entries, so I missed my entry here. I think again, if anything, I would day trade this. So I have an alert set. I have an HA reversal alert set. I have an LRSI reversal set. So if it pulls back and the market's still looking flat and decent, then there could be an opportunity setting up for me personally. That's what I would to look to enter for here.
Great strategy. I would use similar, so that's a good game plan.
All right. I'm gonna look at my tags here because I usually tag some stocks that are moving today. So there was Dell earlier today. I did take a look at ARM. So let's take a look at this guy if he wants to load. Yeah, so it's ARM has a really nice head of steam here, and it's above this high from February 12th. So some nice strong price action here. It's above this high also from June 14th. And this blue line here is that 5-day high. So you can see that it's coming up over here. It's kind of chopping around this 5-day high. Looks like it's trying to fight off some sellers. So I have an alert at the high of the day. I think if you break through that, you get some nice volume, some maybe a key green bar. I think there could be a nice entry point on ARM again as a day trade. So that's kind of what I'm liking in that stock. I'm not sure if it'll set
Also
up,
being
but yeah,
also being added to NASDAQ 100. So
yep,
that probably has some institutions out there buying it as well.
yep, agreed. And I think that's again with the day trade, you avoid that overnight risk in this scenario where that news, if it doesn't get added in, and I'm not sure entirely how the process works, but it doesn't get added in and there's a negative reaction, you avoid that scenario because your plan is to day trade it. All
All
right.
right, I'm looking at another interesting long, and that is on NET. Nothing but
Look at
net. Needs to get needs to get through the 50-day and the
Oh yeah.
200-day moving average, but it is in that earnings gap.
Oh yeah. Yeah. I just
And
put an
so
alert.
that would be a nice day trade as well.
Yep. I put an alert on that May 3rd candle. So if it can break through that, I mean, you're clear that 50 SMA, that 200-day SMA, yeah, into that earnings gap. That would be a great setup. It would be this is kind of if you guys look at Dell today, Dell is kind of 1 day ahead of it. But if it breaks through, you got a pretty similar setup to Dell here, where you can fill in that gap. You got plenty of room. So yeah, I like net. I got an alert set there, so that's looking pretty nice. Let's
Great. You
see
want
here.
to flip to the bearish side, or want to keep
Yeah,
going on the bullish side?
let's take a look at the bearish side here. We got some nice bullish picks. So I'm gonna look at let's see. I know there wasn't as much stuff on heavy sell today. It's like the first place I go to find some picks. Our good friend Sedge is down today, so I'm going to take a look at that because I know that D1 chart has been pretty bearish here. I do like Sedge here. You can see it's a very bearish daily chart. It kind of broke through this low minus trend line here. We're really accelerating, getting some strong volume, some strong price action in a time where the market has been going up. So certainly very weak stock. Today, it looks like if you look at yesterday, there found some support. Later, the market roared up. Sedge did its best to kind of hold those gains or hold those losses, I should say. It kind of gapped down today, testing the bottom over here. So yeah, I think if Sedge, I actually may take this right now. To me, I love that we're testing this level here. We're breaking through
Yeah.
it. You can see some volume coming in, a key red bar, another follow through bar closing at the low. I'm for those in the chat right now. I'm currently doing a day trading challenge. Where I'm trying to get a 75% win rate, 2.0 profit factor on my day trades. So I'm only trading small size. So here I'm probably going to take 2 shares of Sedge short. I'm going to sell 2 right here. Let's see if I can get a fill. I may move it around a bit. But here's my premise. I think that this stock is going to continue downwards. You can see that the market's in a bearish channel. We hit the top over here. 1OP is a little bit dead on a day like this. It's very LPTE, so I think we're going to get down, test the bottom of that channel. Sedge has been dropping down, not really rallying with that market on that last leg. I think I could probably get maybe like 50 cents on this guy. So let's see if I get in on Sedge over here.
That one looks nice.
Yeah. Let's get that guy in here.
Which, by the way, there have been some really nice looking shorts the last week or so, and I'm seeing sustained downward movement. Well, you're going to see that when the market is reaching new heights. There are some stocks that have been dragged higher by their hair, but as soon as the market starts to just level off a little bit, you start to see selling pressure, and then
Hmm.
that selling pressure stays sustained. So I've actually been able to find better sustained moves over the course of the last week on the short side than I have on the long side. And on the long side, it's just this grind to make, say, 30-cent move higher. And then woof, it gives like 20 cents of it back. Then you go through the same grind. If you look at it at the end of the day, okay, yeah, this would have been a nice trade, but it takes an incredible amount of staying power to ride through some of those pullbacks. And it's just a much more tenuous move higher versus the stocks that are getting clobbered on the short side. I mean, it is merciless, just like in SEDG.
Yep, I've noticed the same thing myself. And I think on these really weak bullish, trend days where the market's, maybe kind of grinding up. If I look at something like what we got on the 14th, right? We got a weak bullish trend here, but this is such a weak, choppy trend, that if you have a really really strong short, I found in my scenarios that it could ignore this move up higher because we're grinding up. But this is just like you said, a really weak, tenuous, fragile move. And I found these really nice points on shorts on some days like those.
I am looking, I
All right.
think TWLO could be a nice short.
Yeah. See that on Red
Got a
Royal
nice
Flush.
breakdown, has not
Oh
been
yeah.
able to bounce with the market. So that could be my short of the day.
Oh yeah. I like that a lot. I think I'm gonna set an alert at the low of the day over here. We get a breakthrough on some nice volume. That could be a nice short setting up as a day trade. And I'm gonna flip a couple here through Red Royal Flush as well. Maybe we find something we like. And one thing I
Good.
like to do recently, I love these column layouts here. And what I've been doing is, I know in Red Royal Flush, these are going to have some really nice weak D1 charts. So I've been sorting by the range, and I sort by the bottom of the range because at least in the range, I know that this stock is really weak today. So I know immediately that if I go to Red Royal Flush and I go to the top of the range, Hershey is going to be, yeah, not a bad short. I mean, there's maybe a low plus trend line coming in over here. It might be some horizontal support, so I'd be careful about that. But this stock has a huge head of steam over here.
Yes, and TWLO, the other thing to watch there, and the reason to short rallies or bounces is that it's distancing itself from the 8 EMA. Well, that gap down created that distance, and now you want that to close a little bit. Either the EMA 8 is going to catch up and the stock is going to stay down, or you'll get that little type of a bounce. A pattern that I like. I can't say that I'm crazy about this play because stock doesn't move much, but XOM is a nice little pattern. And what I'd be looking for there is that you've got this little drop below the 200-day moving average, and it's
Mm-hmm.
below the 100-day moving average as well. Everything looks fine as far as shorting. And then here's the tell is if you bring up the M5 chart on XOM, you can see this massive gap up and that strong gap reversal. So as soon as the stock tried to get through that 200-day MA, it was just pounded down. Well, that's a sign that the sellers are definitely there and that the stock is likely to continue lower. So I like XOM on the short side, but again, with anything, I would put the caveat out there that we need to see some market weakness first. So anything more than a day trade, I would not swing XOM short until I have confirmation that the market is ready to roll over. And that comes in the form of a bearish engulfing candle off of a new high or a bearish hammer, something. There have to be some signs of weakness.
Yep, agreed. I like this setup here. You can really see that it tried to get through, and we just sellers really smacked it down. There's a nice signal over here at 10:30 on the 1 OP signal. It's catching a really nice chunk of that move.
So I'm going to take a look at a couple of questions here, and let me try and go to the top. I think the questions are starting to add up here, so we probably should hit some of these. Sorry, folks. We kind of wanted to get through the meat of this, and now we'll answer some of your questions. So one question is on market analysis. Sorry if this is available somewhere else. How much do you take foreign markets into consideration when it comes to determining what the SPY is going to do? Do you look at them at all?
I do. I took again from your system. You're like, hey, I take a look at the foreign markets, every week to see what's going on. So I think the main one that I keep track of here is just China, because that's been in the news for quite a bit of time. So main thing I saw here is like, look, we got a really nice bounce over here in April and May. I know there was some news in the Chinese government. They were doing something with the stock market. I wrote it down, but I forgot. And now that's kind of coming back down. So I think it is taken to account a little bit, but I think I focus a little bit more on the U.S. news and information for the most part. That's probably 80 to 90% of my focus.
Yes, important to see what's going on. And right now, I've written a little bit about it. European markets are weak, and there is some political strife in France. And so you're starting to see their bond yields pop, which is not particularly good. Having gone through this in 2009, I do watch bond yields very closely. I don't think there's any cause for concern yet at this stage, but it's a reminder of how fragile conditions can be when your debt levels are escalating.
Yep. Those credit concerns, I think, Pete, you've been talking about for a very long time now. So I think everyone should be at least the one. If you have to know anything about China, you have to know that is always a potential dark cloud from what I understand.
Yes, definitely. It's something that I watch. I feel like we're treading on thin ice here. So yes, I'm always watching what's happening in China, and you can't get accurate information from their news releases because they're the only country that can tell you on the 1st of January what their GDP is going to be for 2024. It's going to be 5%. And that's right where they are at 5%. Go figure.
That's the toughest part. We rely on those economic releases, and then when you can't always rely on those data points, then it gets murky.
So I'm kind of sifting through all the comments here and trying to look for questions. They are more statements than they are questions. Adobe short, so we can take a look at that. Took an Adobe short this morning. Let's see what we've got there.
Okay. My Adobe chart is a little bit messy, but I know we had a post-earnings gap up. We're at that 100-day SMA, and looks like the stock is digesting some of those earnings gains on the D1. I know that Hari took this trade short, so if you took this trade short, I hope you didn't follow Hari, because Hari knows what he's doing, and you may not know what you're doing on a trade like this. But yeah, it looks like the stock has, it's kind of bounced back up a little bit over here, and hasn't broken that 100-day SMA. So I don't think this is a short that I would take personally. It's just not really showing any the signs that I would want to see.
Yeah, agree on that, and definitely can see why Hari has taken a short in that. So I have no problem shorting stocks where I am seeing a gap up, a bounce, and then a retracement into that gap. So I've traded it many times, but I also know the warning signs to watch for, and I also know to take profits very quickly, that I'm more than likely on the wrong side of that move, that it's going to find support. So I'm always very, very cautious not to overstay my welcome on those shorts. Stock gapped up for a reason. There were buyers. And in this particular case, with any earnings announcement, we like to wait about 5 to 10 days for the dust to really settle out. And then we're going to see what the real move is going to be. In the case of ADBE, what I would like to see from a long perspective is I'd like to see another 5 days with it holding that 100-day moving average. And when it does so, I'd like to see a nice big challenge of that 200-day moving average. So that's the only way I would contemplate scaling into a long position, is if I had 10 days where that gap up held and then the stock showed that it was going to continue to move higher. Now, if it breaches that 200-day moving average and it starts aggressively filling in that gap, then I would have no problem shorting that either.
Yep, agreed. And I've put an alert here at the top of the earnings candle on June 14th, and then the bottom of the earnings candle or the next day on June 17th. So the stock makes a move on one of those 2 days, I'm going to get alerted. I think if it gets below that low, that could be a really nice short that could set up. If it gets through that high and then maybe through that 200-day SMA, that could be a really nice long that could set up. So set your alerts, and I think, know that as potential, and know what you'd want to look for when either those alerts trigger.
I had a question on Qualcomm. I highlighted that as a long, I believe 2 weeks ago. It's been beautiful. And I've got a question on AMAT. And anybody who makes chips right now, anybody who makes video cards, graphics cards, guess what? Yes, I like it, because that's what is driving the market higher. Anything with AI in it. So NVIDIA, like it. AMAT, sure, like it. SMCI, AVGO, MU, all of those companies have or are working on AI chips. So that's the group that's leading the market higher. Yeah, of course I like those stocks.
Yeah, and both of them have been beautiful. I know you called out Qualcomm a while back, Pete. I think it was somewhere over here, if I wasn't mistaken, right? Somewhere around early June, maybe around that 205, 208, somewhere there. So that's been really beautiful move. It's going to be up $20 since then.
Yeah, it's been a very steady grinder too. It tends to be a little choppy here and there, but definitely working its way higher.
Yeah, and for those who saying what's going on here, I mean, look at this strong price action, and then we never really gave a lot of gains back up, right? We got a couple of tests. We found support above that AVWAP-Q, and we held a lot of these gains from the 24th. So when you hug all those gains over here, that buyers are interested. Don't look at that sell signal, and then we get all the way the next leg higher.
Yep. So, and question on AMD. AMD's done nothing. I mean, it has been left in the dust. So apparently, the analysts on the street, who there are constant investor conferences and shows and whatnot. So the analysts are pretty in tune with what AMD has and what they're working on. And right now, they're just not interested in where they're at relative to what other companies are working on. And that bears out in price. You don't have to be one of those analysts. You just have to watch price. When AMD gets going and it breaks out above the 100-day moving average, set an alert there. In fact, I'll just do that myself right now. And I'm just going to click and set an alert above the 100-day moving average. And if it gets through that, then I'll be interested. Until then, I'm going to look elsewhere.
Yep, I agree with all that. I was looking at it earlier in the week. I thought it could maybe set up nicely for a bearish call spread, but I think it was maybe a little bit too far away from the call spread that I wanted to put on. I wanted to see maybe a little bit of a bounce, and then I could get in that fill, but that's maybe the only play I was really eyeing AMD on. And even in that case, I know it's been really weak, but I know that the chip sector has just been roaring hot. So it just makes me, even in this case, a little bit more hesitant on that sort of trade.
All right. Well, I'm looking, and I think that our questions are starting to wane a little bit here.
Yeah. I
Uh,
see one question from Harmeet over here. He says, I often find difficulty trying to put on a stock extended from the 8 EMA. How do you put that into play both intraday and while swinging? So maybe I'll give my take first, and then I'll
yep.
pass it on to Pete for his take. So if I'm swinging, I usually don't take it. That is when it's too extended from the 8 EMA. So example here, if I look at cost, right? If you look at cost, if I zoom in a little bit here, if you look at cost yesterday, it's not too extended. You know, you're close to support. You're not breaking out over here. So if I'm swinging it, I do value that pretty heavily. And you know the stock can still keep going, but you know that it may pull back to the SMA. You may have to take some heat. So you just have to bake that into your game plan. If I'm day trading a stock, so let's look at Sedge, how that guy's doing over here. If I'm day trading a stock, I'm not worried about it as much because that retracement is not typically going to come in that same day. And if it does come in that same day, there's going to be plenty of warning signs over here. So I see that, you know, Sedge market's been rallying up higher. Sedge has been holding the gains over here. If market forms a double top and then we start to get lower, I think Sedge is going to go down. So still like Sedge as a short, but I'm only going to day trade it. So I'm not worried about that pullback to the 8 EMA unless I get some really sharp intraday reversal. But I should see the warning signs on the intraday chart to get out even before that reversal happens. So that's sort of what I look at.
Yep, that's exactly the same thing that I do when I'm day trading. I'm really interested in those nice, consistent red candles. And let me also distinguish when you've got a stock in the first half an hour, 45 minutes, where you stacked a lot of red and the stock made a move that was already, say, 1.5 times the 20-day ATR, you're not going to be chasing that stock. You shouldn't chase that stock. And even if it comes on heavy volume, you're going to get a bounce on that type of move. Check the news, make sure that you know what's driving the stock. But your better pattern is more of these consistent red candles that are just kind of a drip, drip, drip lower, where you haven't really made a huge move down, but just a very consistent one, because what that one's showing you is that there is selling pressure every time the stock tries to rally. They just hammer it down a little bit, but it's nothing aggressive. That's the type of move that you can take a short in, and you're just grind, 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 riding it slowly the entire day, and you'll make a lot of money on that. So for those of you who have chased a stock that, hey, it's stacking red candles, it's stacking red candles, I want to short this. Look at the volume, look at the breakdown. Okay, well, if it's made that giant move right out of the gate on the open, it's going to bounce somewhere along the lines. And that's when you have to lean more on your alerts and set those. If it's just drip, drip, dripping lower, then you can start taking a short position right away and then just keep adding on confirmation. You see relative weakness, mark it up, stock down, add to the position.
Yep, and I pulled up the chart for you here. I know it's the D1, but a similar idea on an M5, right, where it's just dripping, 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 dripping lower, very, very steady. Versus what Pete's talking about, where we get these huge explosive moves that it's just the timing of that. The price has jumped so quickly, you know, that it's, you know, we're gonna get that move higher versus when we go steady drip, right? We're making that same progress, but over a longer period of time. It never gets too overheated.
Exactly. All right. And
All right.
so, Harry, your comment about Harry pointing out that it was Roaring Kitty and that's the reason for Chewy being up. It's important when you get a big move in a stock like that, find out what is driving the stock. Now, okay, this is a pet food supply company. What could they possibly do that's going to increase the value that much overnight? Okay, any kind of biotech company with a clinical trial result, okay, I get it. Hey, this is the future of the company. That thing should fly like that. But you get into Walgreens or some of these, Pepsi, why would that stock make such a big move?
Yep.
CHWY. Why would it make a big move? Okay, so you go in and you read that it's Roaring Kitty is behind it, and maybe it is the whole Wall Street Bets group that's in it. All right, so now at least you have that information, and it could be a legitimate move. We'll see, but you're tempering your excitement. And so that's why I think my long pick of the day is going to be net. And the caveat being that it can, on a D1 basis, get through the 50-day and the 200-day moving average and close above it. If it can, then I like it for a swing long, and I like it to be able to get back up to the 100-day moving average.
Yeah. I like that. It makes a lot of sense to me. I guess if I had to give a pick, well, I did already take Sedge, so that may be my day trade short pick of the day. I'm gonna stick with that here. Yeah, I'm just some of these charts are loading up over here. But yeah, that'll probably be my day trade short. I wouldn't swing it again. To me, it's a little bit, a little bit too overextended for my taste as a swing. But yeah, I mean, it's just beautiful, really strong daily chart, really weak M5 chart over here, and it looks pretty good. I think if we get a new low right here, we kind of break through this 1230 candle, and Sedge has a nice little compression break. I may add to the trade.
Beautiful. And let me just conclude by saying that Rajul has just demonstrated how passionate he is about trading. He's overcome a lot of obstacles that many of you are faced with, and he's continuing to push hard at it. He's doing his videos on YouTube each day, and it's different to think about something and to commit it to writing or to commit it to video. You have to really nail your thoughts down and organize them. And that whole process, it just really cements everything. I would encourage many of you, most of you, all of you to do that. It takes a lot of time and effort, but I think that you're going to see some real rewards to doing that. And I've also provided a link in today's live event description to Rajul's YouTube channel. He's doing these videos daily. I think you're going to be able to learn a lot from him. He's very polished, so this is becoming a very well-oiled machine for him. So I just absolutely love everything that you're doing. Congratulations.
Thanks a lot, Pete. I really appreciate that. To anyone watching, the first Pete video I watched was the end of 2021, where Pete was talking about, hey, we didn't get a market rally. We should have the holiday bullish bias. And so I never thought in 2.5 years I would be on a live stream, with Pete talking to everyone here. So, just a testament. Even with that video where I made with the journey, it's a huge amount of support and a lot of relation from the whole community. So I definitely really appreciate all of that. It was more than I expected. And
we'll do some more videos in the future. And, I will say that when you're trading, you're looking for a 75% win rate. You need that because it puts you in the right mindset psychologically. And when you're teaching and you're educating, you don't get that satisfaction because there's a huge failure rate. No matter how hard I try, no matter what type of resources I put out there, the truth is that the vast majority of people are going to fail. And when I do get a success story like yours or many of the other members in One Option, it's what keeps me going. It's what motivates me. So thank you so much. I appreciate all that you have done and all that you are doing.
Thanks a lot, Pete.
All right. Thank you. Thank you, everyone, for attending. I hope you enjoyed this video, and please post your questions. We'll have the live event up on my YouTube channel, and Rajul and I will be keeping an eye on it, and we'll answer that. Thursday, Harry and I decided we are going to do a live event. I'm going to miss mine a week from tomorrow. So look for a live event this Thursday in 2 days. So we're going to be coming back from a holiday. Hopefully, we'll have some market movement and some price action to follow. Thanks so much. We'll see you then. Thank you, Rajul.
Thanks, guys.